That's one. Yeah.
Okay, now it's recording. I'm gonna quickly go through what I just did with you now.
Yeah.
So that it's in the recording. So I must just share that screen there quickly. I will just keep, you see, I can see here when the guys arrive, but once I start sharing my screen, I don't know how I'm going to see when they arrive.
Maybe send them a WhatsApp and ask them what time they're jumping in.
Let me just send. Okay, I'll do it on the group. Okay, I'll just send them a message.
Okay, cool.
Let me just give them 5 minutes.
Yeah,
because it's a good. They can actually learn a lot from this as well.
Yeah.
If they do come in here. Let's just give them 5 minutes. So what did you say? Where do you live? You live Constantia?
No, I live in the Kreppelbosch, which is kind of between Meadowridge and Constantia, I guess. Sort of down Ladies Mile Road. It's past the engine garage.
Oh, yes, okay, yes, okay. Jared says he's driving home. Let me see. Let me just ask him. Jared just said he's busy driving home.
Yeah, I saw it.
Oh yeah, can you see your WhatsApp there?
Yeah.
So I'll just the job should be around.
Yeah.
But actually Jared's the one who should both of them need to be here so they can actually hear what I'm saying. I just want to have a look at the Bitcoin chart. There's something I wanted to show you guys here. I just want to go and find it as well. Something we discussed last week.
I think I bailed at the same place as you did.
Yeah.
Yeah. It was like 30,000 Rand in Ethereum. I think it's the same. Yeah.
I'm telling you, the psychology here is a big problem. It's one of the.
I said to myself early on, I said when it hits 30, I'm selling. Well, I'm setting it there, and I'm not going to change my mind. And I think it's actually good, yeah.
No, that is good because a lot of guys don't do that, and then the price turns. Yeah. That's why even if the price does turn, you must have certain levels. That if it drops to that level, you also get out because so many guys end up getting into the trade at the right place, and it just ends up being a correction up, and then it starts dropping, and then they lose all their profit.
Yeah, that's what I was reading.
which also freaks your head out completely.
Yeah.
So and there's a
Yeah.
saying that says, you know, you never go broke taking profit.
Yeah,
So it is horrible. I've been through that many times as well, where it then carries on.
Yeah, you miss it.
And you know, it's that FOMO.
Yeah.
And then
serious FOMO today.
And then that, you know, and then the problem is
you get back in.
Your head out, then you start chasing it, and you jump in late, and just as you jump in, it'll turn. And you got big shit as well.
I was thinking about that earlier, and I thought, no, you've told us not to do that. Never buy on that app. You really got to have incredible discipline to get that right. And the only thing you can do is, like, I really want the other guys to hear this, is like, I'll show you just now, but just after that triangle, it broke out of that triangle, it went up and it pulled back again. Yeah.
Now that is where you could have got in, but your stop loss has to be just below that. Just if you're gonna jump in late, you have to wait for a small correction, then get in, but your stop loss has to be just below that. And that takes a lot of discipline.
Yeah. Here's Graham, he's just calling. I'm going to see what Graham. How's it, man? Yeah, cool. And you, man? No. We're on the Zoom here with Shark.
Let me just make sure. Okay, this recording has started. Okay, I'm going to share my. Just get rid of WhatsApp. Yeah. Let me go share that screen. Okay, can you guys see this this chart? Yeah. Hey, everybody can see it. Okay,
we can see it.
Yes. I'm going to go back to the daily. On the daily, this gray line is the 200 period moving average, and the blue is the 50. And obviously the 10 and the 20 are the other red and I think it's hot pink color. But the point I want to make here is that when I'm on the daily, this 200, the minute I switch to a 4-hour, this 200 becomes like a 50, and the 50 becomes like a 20. So you'll very often see that these same moving averages on a shorter time frame also become support and resistance levels. All right, and now on the 4-hour. Now, at the moment, so that moving average there is the 200 period moving average. But now on the 4-hour, it's actually sitting in the same place as the 50 would be sitting, almost the same place as the 50 would be sitting on a daily. And that this blue one, which is normally the 50 on the daily, is almost acting as a 20 now on the 4-hour. So you can see it broke through that resistance there, and it then came back. It actually tested it there, found support on it. Now, so the first thing I did is I drew in from a bear chart. The first thing I did, so in other words, I was sitting here with nothing when me and Craig started talking earlier on. So the first thing I'll do is I'll draw in my fib, because I'm interested in now from this high, it's come down and now the price is turning here. So I want to see, I want to draw the fib from this high down to this level here, because that gives me, it's almost like you can see this as a measurement scale. And you can see the 50 fib there is often acts as resistance, important resistance, but that 50 is also sitting roughly opposite that moving average. And it's also sitting opposite this previous low here. So there's actually a lot of resistance in this whole area. Now, at the moment, this happened on Saturday. Remember, Jacques, when me and you were together, this price actually came back down here. And this is where I bought here somewhere. Now, so at the moment, this can be seen as an ABC leg. Now this C leg, this leg, is at the moment longer than this leg, which when we do Elliott wave theory, can be seen as a new impulsive structure, especially when this leg, if this leg starts exceeding this height by 1.618, which is a fib ratio, then there's a very good chance that this is going to be a new impulsive structure. But we first have to see what's going to happen in this area over here. Now I'm just gonna zoom in. I'm gonna go into the 1 hour now. And on the 1 hour, so there's that, this is that C leg up. So I'm putting the C here because I'm still viewing this at this point in time as a correction in this bigger downtrend. I'm still looking at this as a correction because this actually also, when we do Elliott wave theory, this could be a 1, 2, 3, 4, and there could be another fifth leg down here, which could take it down to this level. So I'm going to treat this at this point in stage as a correction until and see how it gets through this level. If it actually gets through this level and then comes back and finds support here, because this is such an important resistance level, and then carries on up, then we can maybe see this as a new impulsive structure. So back on the 1 hour, what I've also done is I've drawn this channel in here. Okay, you guys can see this channel. The channel could also be there, but I'm drawing it there for now. And remember last week we discussed continuation patterns. This was actually a triangle over here. You guys can all see this triangle here. Are you guys with me?
Yeah.
I actually, last night, the psychology got the better of me. And when it turned here, the first time here, I actually got out. What I bought down here. Where I should have waited. And today it became obvious, no, you know what? I actually got out here, Craig. This went up, and when it turned, when it did this.
Yeah, that's where I got out as well. Yeah.
This is where I got out, there. And you can see how this came down and found support more or less in the same area. So even though I'd got out there, I could actually have got back in here. Because if I'd got back in here, my stop loss would have been just over here. Because I would have known very quickly where I would have been wrong. Anyway, so now it's come up and it's done a triangle there. Now within this bigger ABC leg here, can you see that this also looks like an ABC? This looks like an A, B, C leg. Obviously, if it's gonna, you see how it's hugging this channel line here, and it's not really accelerating here. Also worries me a bit the fact that I'm saying that this might not be a new impulsive structure and that this might be a correction. And obviously, if it breaks this channel and starts coming like a certain amount back and starts coming below, especially if it comes below this cluster here, then it's really going to start showing me that it might be corrected, but it might also only come back 38% and carry on. So this is actually going to take another day or two to realize exactly what's going on here. The other thing is the dollar. This is the dollar index over here. Remember I showed you guys the possibility here that it's a big, you should recognize this chart. Here's the March last year, the COVID high. You should recognize this chart. I've showed it to you before, this dollar index. And remember I drew in a triangle like this. And there I can actually draw the triangle there, but I can actually draw it right from here, like that. Now this dollar today has been strengthening again. Remember, this is on a daily. If I go on the 4 hour, it's been strengthening today. So this on a daily chart here, this area here is a very important area. You'll see that this is also the 78.6 level from this high. If I draw in this chart like that, you see it sitting on the 78.6. So this can be a continuation pattern. This can be an ABC, and then it can carry on going down. If it goes through this level, then this here could possibly have been the bottom already. Although this doesn't look very impulsive. I don't see a 1, 2, 3, 4, 5 structure in here. The point I'm making, and the reason I'm saying that, is that if this goes through here, but it's also going to depend on what the stock indexes are going to do. Let me just go and show you the stock indexes. If you look at the S&P 500, but I need to discuss the momentum. These two indicators at the bottom here is what I want to discuss with you guys today. The one is an RSI and the other one is a MACD, and they actually show momentum in the market. And one looks for divergences, and I'll also explain to you what divergences are today. But this is looking very top heavy here. And if this is on a daily chart, this is S&P 500, if this corrects, and especially if it goes through this level, if it's a bigger correction, then this will definitely make the dollar strengthen. And if the dollar strengthens, if stock indexes do a correction, and if the dollar goes through that level I've just showed you, that's going to pull cryptos down again. Crypto is not going to carry on going up here with the dollar strengthening and with the indexes doing a correction. And the other thing that's interesting as well is that the futures market, they have 4 quarters of the year. So every 3 months, so the end of March, and now again the end of this month, end of June, is when a lot of the futures contracts and the option market, all the derivatives expire, and the guys and the big funds take profit. And that's another possible reason why the S&P 500 has been going up so strongly still, is because the guys actually push the market up, and then at the end of this quarter they start taking profit. And then you might find that over the next month a correction takes place, the prices come down again, and then the guys over the next month or next 2 months, then they start buying again and start pushing the market up again. So and also another thing, like somebody, I listen to webinars every day. Another important point another guy made today, he said, remember one thing, the crypto market, there are a lot of the big funds are getting involved, you know, and they're taking positions in the crypto market, but it's not necessarily a good thing, because they can push the market, and they if the big funds get involved in the crypto market, they need to make money, and they would love to push this market lower. And just when you think it's going up, they climb in and they start shorting the market and they push the prices down. So the crypto market up till now has been trading very technically. From a technical perspective, it's very clean moves, very clear moves a lot of the time. Those moves might become a bit more obscure when the big funds get involved, because they want to screw you around, and they want to mess around, especially with the smaller retail traders, and especially the guys who are trading on high leverage. They want to take them out. Before I carry on, have you guys got any questions? Happy.
Yeah.
All right. So, and obviously all right. Sorry. And yeah, this is be back in the
sorry, Jacques. Is there a way of overlaying the S&P 500 over the dollar graph?
Yes, there is. And the best way to do that is in TradingView.
TradingView.
Remember,
okay.
I showed you. I don't want to stop sharing the screen now, but remember,
no, it's fine.
remember in TradingView, if you go into TradingView, there at the top, there's in the top row, one of those menu items is compare. And remind me at the
okay,
end of the
yes.
meeting.
Okay, I'm with you.
At the end of the meeting, I'll show you how to do that. But it's pretty.
You could compare, for argument's sake, the Ethereum with the dollar.
Yes, you can overlay anything you want to,
okay.
with any other instrument you want to, but
because there must be a correlation.
Yes, let's get back to the bit later. I'm going to carry on with
okay.
Ethereum chart. The other thing is, so the first thing you do is you draw in fib levels. Then you look for horizontal support and resistance levels. Obviously, there's a support level at the bottom here. Here's a very important, this was a support level which broke. So it broke that support. You see how it actually came back and tested that support level there. But now it's resistance. So it broke that support level, came back, tested it, and it carried on down. So that level now is a resistance level. And you can see this resistance level actually goes through. It goes through here as well. So this is a very important level that it has to get through. So now it's coming into resistance. So that's the way you approach any chart. The first thing you do is you draw in your major horizontal support and resistance levels on the daily. There's the support level, there's the resistance level, there's the important support level, and then you draw in trend lines, bigger trend lines as well, like there'll be a trend line going through here. I'm getting a bit sidetracked. Okay, and now on the 4 hour, I've drawn in, then draw in the fib, then look at the nature of how this, it's made a low here, the nature of what this wave pattern is doing, but also draw in shorter term trend lines. And there's a trend line. Jared, can you see another trend line over here, the one I want to draw in now?
Yes, I can.
Can you see it, Jared?
Yes.
Or Jacques?
Yes, I can see it.
Where is it more or less?
It's looking at the 3rd of June. What's that? 7th of June.
Around about here, 7th of June, yeah.
And touching on the 15th of June.
Yes. This is also an important trend line. And you can see it's actually stopped right on that trend line now there. It's sitting right on the, I'm going to go into the 1 hour now. And this will actually also be, this might also be quite an important trend line as well, eh? Yeah. On the way up. And I'm not necessarily drawing this straight onto the wick because, you know, this is a lot of debate whether you should draw it there or there, but you'll see if I switch this to if I switch, that's candles, if I switch this to a line indicator and it's not candles, you can see why I'm drawing it over there and I'm eliminating those wicks. I'm going to put it back on candles, but you can see there. So that was just a very quick spike down. But this trend line I've drawn here over here, you see that it also coincides with a 78.6. So this will also be a very important resistance level when it eventually gets up there. But getting back now, okay, so this trend line here is also an important now resistance level. So there's a hell of a lot of resistance in this area that it has to get through. And what it'll most probably do, yeah, it'll either reject this and pull back, or if it gets through this resistance, it'll get through and then it'll come back and test it. And if typically, if you're not in, this is where, on this pullback, where you can get in, because once again, on this pullback to test this level, you know, if you do get in here, your stop loss is going to be just below here. Okay. You guys understanding my logic?
Yeah.
Here was another trend line that broke. Can you see this trend line here? And can you see over here? I want to go into the 1 hour now. Here's this trend line I've just drawn in, right? There. Can you see how it actually, if I draw it like that, even better. Can you see this behavior here? It was hesitating on this trend line. And can you see when it eventually broke through, how decisively it broke through here? So also, if you hadn't got in here, you could have looked at this and you could have actually put a buy order in here, which would have triggered automatically. Remember last time I showed you how to do buy orders. So typically, let's say let's say I wanted to put a buy order in here, if it broke through here, I can right click here, I can go to trading and I can say buy stop. Now buy stop, and I can pull this down. Now this buy stop means that if this price, once this price hits that level, it'll automatically buy for me. That's a definition of a buy stop versus just a normal buy. And the same way, I can put in a sell stop. I can put in, let's say, if this price dropped below here, I can over here, I can put in, on trading, I can put in a sell stop. So that means that if this price drops to that level and goes through that level, it's going to trigger a sell. All right, so yeah, let's just go and look at the Bitcoin chart quickly while we're on this topic. I've drawn in a whole lot of vertical lines here because I want to show you guys some other stuff. So just ignore all of that. I'm just going to look at, it's on the daily. I'm just going to look at what's going on here as well. And very often, if you can't see the trends clearly, just go on your minus sign here, just zoom out. It just squashes the chart. And then you can actually see your trend lines and where the areas of support and resistance are. You tend to see them easier. Jacques, you can see this trend line. Can you see there's a trend line from the top here through here that it broke here? Here's that other trend line. Did you guys read the posts I made on Monday? I was talking about this trend line. You see what happened there when it, you see how it stopped there. I'm just going to zoom in here. You see how it respected that trend line there. Remember, this trend line comes from back there. So I could have drawn this trend line in from back there already. And you see when it came up, how it stopped there and dropped again. And it came back up to that level. And can you see the hesitation here? Can you see the market's very sideways? And then it broke through. So there's obviously a bigger trend line from up here as well, which also coincided with that level, with that same sideways market there. And that's a continuation pattern. If I go into the 1 hour, can you see that's a triangle? So this was a very good area to get in. If once it starts doing this, it comes down, goes back up, comes down. Once it does this and starts going up, you can already draw 2 lines in here, seeing that as a triangle. But that sideways movement in that triangle is because of this trend line and because of that trend line. And if I go and draw a fib in from this top level, can you see that it's also on the 50%?
So is that
drawn,
sitting?
Sorry?
Is that sitting now at a corrective level? Because it's hitting the 61.8.
It's sitting at a possible resistance area here. So it's broken through this, it's broken through this trend line's resistance, it's broken through that trend line's resistance, but this is another resistance level here. And it's also approaching that moving average, which is going to act as resistance. That and the 61.8. So this is definitely a resistance zone here. But the other important thing here is, can you see that this leg and that leg are almost equal? In other words, if I go and draw a channel here, like this, or I can also measure it like this. When you draw a channel like that, this top and this end of the channel is equaling that move. If I go and do this now, if I draw something like that there, I'm measuring the height from there to there, and I'm just bringing it across here. So I'm now measuring the height from there. Can you see that also coincides with this 61.8 level?
Yeah.
So exactly there, this C leg is equal to the A leg, and it's a 61.8, and it's this moving average. So now we can see that on both Bitcoin and Ethereum. If I put these two charts next to each other, if I go and put my Ethereum chart here, and I put my Bitcoin chart here next to each other, big, and make sure they're both on the same time scale, or let's put them both on the 4-hour. Because the crypto markets, very much, there's a lot of correlation between them. So on Ethereum, I'm approaching a very important resistance level, and in Bitcoin, I'm also approaching a very important resistance level. Okay.
So my question is, does that mean that you wait to see what it does? And if it does break through that resistance, it's a buy opportunity.
Yeah, but I must be honest with you. My psychology doesn't allow me to buy there. It's just, the risk for me is just too high. I won't feel comfortable with it. Here was the right area. You must realize that very often, if you've missed an opportunity, you've missed it. You've got to wait for the market to come to you again. Then you must look for an opportunity somewhere else to try now, and that's why it's also a good thing to trade more than one market, because sometimes you get one market moving sideways and it's doing nothing for a month, but something else might be moving. Or you've missed an opportunity here, then rather look for something else to get involved in. To go and chase this now is very difficult. You can wait for it to convincingly break through here, and as I say, wait for it to come back, and then buy, because then your risk is defined, because your stop will be just below that. But as I say, I prefer, here was a place to get in. Here's a flag. Remember last week we discussed flags. There's a bullish flag. There's a triangle. So those were places, if you hadn't got in at the bottom here, where you could have got in. Here's a place, this was a flag where you could have got in. That was a correction onto this level that could got in. This up here, this is chasing it. I wouldn't get involved there. You're too late, and you just have to accept it. You have to wait for a correction somewhere to take place.
I'm with you.
What happens if it keeps on running?
Well, then you suffer serious FOMO and you pull your hair out, and there's actually nothing you can do about it. All you can actually do is wait for a triangle to develop here. Either it's got to break through, come back, but when it breaks through and comes back, it'll form, the way it comes back, it will typically form again a triangle, or it'll do an ABC correction.
Is it not moving in the channel though? Is it not? What if it works in the channel?
It isn't a channel, but my point still is, you can't chase it here. You have to wait for a correction. like a correction either in the form of a flag or a triangle or an ABC pattern, and then you get in. You can't chase this over here. You're looking for shit.
It looks like it's top of the channel.
It's not good practice to do that, because you're going to get away with it once or twice, but sooner or later it's going to bite you. It's just not. It's not good practice. Okay, here's also in Bitcoin. I must also draw a channel there.
What I find astonishing is how different the charts are between 1 hour and 4 hour.
No, it looks different to you. The only thing is, remember, on the 1 hour, you're just seeing more detail. But it's the same chart.
It's the 1 hour on my other screen. I've got the 1 hour, and it looks like this thing is kind of at the bottom, but moving up.
Yeah, both charts are on the 4 hour.
Okay.
Let's just look at one chart again. One must be very careful of looking at too many things, because it screws with your head and you start seeing things that you shouldn't see. There's your daily. So this is that consolidation sideways pattern. So the minute I switch to 4 hour, all I'm doing is I'm zooming in. It's like a photograph that you on your iPhone that you're zooming, or your cell phone that you're zooming into. So all I'm doing is I'm zooming into this area. So there, that area becomes clearer. And if I want to, but like that triangle there, you won't see, especially if you want to get in at a later stage, you're not going to see that triangle on the 4 hour. So I'll switch to the 1 hour and it becomes more clear to me. That's all you're doing. All right.
But it looks like a bad time to buy.
It does.
Because it's going up. And if it hits that resistance level of, call it 30, that blue line at 61.8 fib, when it hits that, it's probably going to come down.
I mean, look at this Bitcoin chart here now. Yeah, there's a flag. You can see that's an ABC correction. You can see there's a trend line. This would also have been a 78.6 off that level. Can you see it does a correction, ABC? It's only a 3-leg down. It's not impulsive. This level here would also have only have been, that's about 38% of this move here. So that's a good area to get in on this correction, because it's an ABC correction and it's only come back 38%. There. That's only 50% of that level. So that's a good place to get in. And you know, if this thing carries on dropping, your stop loss is just here. This is where you need to get out, because then you're wrong. So that's the kind of place you get in. And also you can clearly see here's your flag. Here's your what we discussed last week. There's your bullish flag. So you could either have got in there, or you could have got in there when it breaks that flag and goes up. Jared, you with me?
Yeah.
So that's two places you can get in. But now what you want to do here to get in here is the same as getting in here. You'll get in here, and then this will start happening. I'm not saying it's going to, but the chances are good that this thing will start happening. So now what do? Then the price starts pulling back, but now you got in there. Now where do you put your stop loss? That means you have to put your stop. If you want to get in there thinking that this is going to carry on going up, your stop loss has to be just below here. So this is dangerous. This is as dangerous as what this is. Because you get in here and you don't get out, the price turns against you, don't get out, and the next minute you know, huge loss. Because remember, this thing turns here and starts dropping and you got in here. The more this drops, the less the chance that you're going to get out, because you're suffering a loss and now you don't want to get out. And then it really fucks with your head. Are you guys listening to what I'm saying?
Yep.
The more it moves,
it's called fear.
Because you've got in late and it starts doing this, now you start suffering a loss. Then you say to yourself, no, here's
Buy
a
more.
bounce. Here's a bounce. It's going to carry on going up. I'm going to stay in. And then it turns and now you don't want to get out because you're already in a loss and you don't want to suffer that loss. But at the end of the day, look at this, look from there to there, how big this loss actually becomes.
Because it broke through the bottom trend line.
Yeah, there's a trend line. There's a trend line here as well. But I'm talking about the psychology of the whole thing.
Yeah.
If you'd got in here, or if you'd got in here, at least you've got justification to get in because the price has done a correction. But to chase the market is.
But now, if you go back to the 20th, what's that, 21st of June, where it had the bottom dip.
Yeah.
And you can't see the rest of the markets.
You can't see
quite
it.
difficult. Yeah, it's quite difficult to know if that's a good buy position because you don't know if it's.
No, it is because there's a major support level here. And if you go on the 1 hour, that level, this candle, look how big that candle is compared to that candle. This is very impulsive. The same way as this, look, there's a good reaction here. You see this reaction off here. Can you see that candle is much bigger than this candle? That one there. There's a good reaction here. There's a good reaction there, and it's a very important support level. So, and also, okay, let me start discussing the RSI and the MACD, and then you'll also understand.
Will this chart move in the next half an hour to tell us whether it's going to go ahead of this?
What do you mean? What's going to happen? Yeah.
Yeah.
It'll, because this is such an important resistance level. This is gonna. It might even get up here, and then pull back. It actually has to break this channel, because this is something that I might consider, because I can trade both ways. I can go long and I can go short.
Yeah.
If this breaks this channel, it'll break.
Then you're going to go short,
and it'll come back up again. And when it comes back up is when I will short it.
Why would it come up? Why doesn't it just fall all the way down to the bottom level?
Does that. Okay, yeah, it just carries on going down, but it doesn't always do that. You know, it might just go straight through you, but for my risk reward and for my psychology, once again this starts dropping, I can short it right there. But now the problem is, if it now turns and it comes back up, now I'm going to start suffering a loss, and then it's going to screw with my head. Where I'd rather let it break, come back up. And when it gets here, that's when I'll short it, because my risk is very small. I know that if this is going to start approaching that previous high, and it wants to, then there's a good chance that this was just a correction, but my risk is very small. I'll get out very quickly here. Whereas if I shorted here, and it starts going back up, it's got quite a long way to go before it's going to prove me wrong, because it's only going to prove me wrong once it gets close to that level and it looks like it wants to go through that level again.
But your trend suggests that it's going upwards.
But which trend? If I look at the daily, if I look at the daily, the trend's down. If I look at the 4 hour, the trend's down. This is still in a downtrend. It's only on a shorter time frame that the trend is up.
I'm just looking from the 23rd of June to the 28th of June, the last 5 days.
Yes.
That trend is up.
This trend is up. I agree with you. It's definitely up. But in the context of the bigger picture, this could just be a correction. This could still be just an ABC correction before it carries on down again.
Okay.
So theoretically, strictly speaking, yes, on the 4 hour and on the 1 hour time frame, we're in an uptrend since here. You could argue actually since here.
Yes. Yeah.
But
Started
actually
the
in the
21st.
bigger picture, we're still in the downtrend.
23rd.
So we actually trading against the trend. And that's even more reason why you want to get in on something like this. You can't chase this thing here. I'm not saying that it's going to turn here. You know, it could blast through and carry on up. But you've got to realize that this is an important resistance level. If it gets through here and comes back, you got to wait for a correction to get in. You got to get in on a correction. You can't get in when the price is busy, because now you're chasing it. It's going to bite you.
Once so you wait for it to turn and then jump in.
On a correction. Because the bottom line is, remember, forget a minute about any fundamentals or what you might have been reading. Nobody knows. Nobody out there knows what's really going to happen from here. But the technicals will show me what's going to happen. So if you want to chase this here, first of all, you're suffering from FOMO. You're actually the mooring with yourself that you didn't get in here. That's what's busy going on.
Well, I'm the mooring that you sold.
I'm the mooring that I sold. Yes, there. So now I've got to look for a better place to get in, but I can't chase this here because this might happen. It might just turn and come down.
Okay. So waiting game.
Even if this comes back onto that channel, if this drops to there onto this channel is actually support. I can get in there.
If it doesn't break through.
If it doesn't break.
If it breaks through, it's going to look for new support.
Yes, 10 to 1. Remember, this is also that this trend line here is also a support level, eh? That's a support level now. And this is also a support level. Remember that all lines that were previously resistance that get broken through on our support and vice versa. So if this price drops onto there, you can buy there because then it might bounce. And if it then fails again, it does this and fails again and starts coming down, then you know, look, if it's going to go through the level that you've just bought. Then you say to yourself, okay, I'm not going to lose anything. Let me see what's going to happen, whether this is going to carry on dropping. But at least by waiting for it to drop to here before you get in, your risk is defined. You guys must understand the whole time. I'm on about this the whole time. I'm saying my risk is defined. And when I say my risk is defined, it means that I know very quickly where I'm wrong. That's what I mean by saying my risk is defined. If I buy here, where am I going to put my stop loss? And where am I going to decide when I'm wrong? And by the time I decide I'm wrong, I'm already in a big loss. So if I buy here and it drops to there and it breaks through, now I realize I'm wrong, but I've already suffered this loss. Whereas if I wait for this thing to drop here and buy here, there's a good chance it'll bounce. Now I'm already in profit. Then it turns and it comes back to my level I bought. My risk is better defined. I'm not going to lose a lot. You guys understand what I'm saying about this risk is defined the whole time?
Sort of. The problem is we can't really predict what's going to happen going forward.
But even
what you're saying is this is too high. This is too high. The trend is up.
It's too late. It's too late.
So you want to wait for it to come down back to this bottom trend line there before you buy.
Here was a good place to buy in this triangle, like especially on the second leg down, and it starts bouncing again, and the third leg. Here's a good place to buy because your risk is defined. You know that if it comes below this level, you're wrong, and you get out. Here, your risk is defined. It's doing a flag. A flag is a continuation pattern. And especially if it breaks out here like this, you suddenly see this thing breaking out of this flag. Here's the flag. Your risk is defined. If you bought there and this thing had turned and come back down, you know that if it goes below this level, you're wrong already. So you've suffered a very small loss. If you buy up here chasing the market and it turns, you're going to be in a loss right from the beginning. And your loss is just going to get bigger and bigger.
Aren't we in a flag right now?
No, where's the flag? This is a bullish flag.
Right, no, on today, just today, it's just going up.
It's just going up.
And it's,
you want a correction. Remember, flag is a corrective pattern. A triangle is a corrective.
okay.
Sorry, it's a continuation pattern. In other words, the price comes, and then it's consolidating. That's a continuation pattern. When you see that kind of pattern, you know there's a very good chance that the price is going to carry on. It's a continuation pattern. It's not a reversal pattern. Here's also a flag. This is a continuation pattern. It's not a reversal pattern. There's your flag. This is the kind of place you want to buy, either there or when it breaks through there, because this is a continuation pattern. The price comes into this flag and it goes out the flag in the same direction. This, when it started yesterday, actually started looking to me almost like it could have been a head and shoulders. You see there's a shoulder there, then a head and another shoulder. And I was expecting it to break through here. Then this would have been a reversal pattern if it had broken through there. You guys with me? Reversal patterns we spoke about last week.
Yeah.
But this what I thought was a reversal pattern ended up being a continuation pattern because it made a triangle. Now we're sitting up here. I don't know what's going to happen here. It's giving me no clue. All I know is that there's a lot of resistance here. Am I making sense? Hey, Jared?
Yeah.
tricky.
Craig?
Yep, understand.
You happy?
I don't know when you would buy.
Yeah.
What you're saying is don't buy. Wait for it to do something.
You can't buy here. You're chasing the market. You need at the end of the day, when you buy, you got to justify why you're buying. If I bought here, I can justify. I can say this is a flag pattern. It's a bullish flag, and it's only pulled back. That would have been 38% of this move. You can see that, eh?
Okay.
It's 38%. In other words, I've got justification to buy here. How am I going to justify myself buying here? What?
Yeah, it looks like it's...
What is my motivation for buying them? Besides that I'm now the murin that I didn't buy up down here or here. You know, you haven't got a motivation to buy there. It's looking for shit. I can't put it more simply. They soek for kak. Like here, if you'd bought here, this is the place to buy. And if you'd bought here on this breakout or in this flag on this 38% correction here, and the price goes up and the price starts coming back down, well, then I'm break even. And if the price goes through that level, because I bought there, once the price gets back there, I've suffered no loss. So I just close my position. And I can see, according to what's happening here, I can see, but there's a problem here. This price doesn't want to go up. So then I'll rather close my position and I'll wait and I'll reevaluate and I'll give the market a half a day or a day to make up its mind and to reveal to me what its actual plan is and what it wants to do. But this is a 78.6 retracement from that low. So this was a good place to buy, because once again my risk is defined. If this had carried on coming down, theoretically, this is the only loss I would have suffered, a small loss. I would have realized very quickly that I'm wrong. The same there. I realized quickly that I'm wrong. Okay. All right, let's get on and talk about momentum indicators. Now, the RSI, you'll see on both these charts here, I've got it's called an RSI, and this one's called a MACD. You can see the names there. Now, these are momentum indicators. Now, I'm just going to read you the definition of a momentum indicator. Let me just get my notes here because I want to make sure as well that I'm going to cover everything. All right, but actually before we get on to that, there's something else I need to show you. Let me just go, and I just want to put this onto the shorter time frames as well. I'm just putting my moving average. I'm just putting those two moving averages onto the shorter time frames. That's a 10 and the 20. I'm just putting them on there as well. When the price is going up like this, there's obviously a trend line in here that it would have broken, which would have. So I'm going to go into the 4 hour. But I'm going to look just at this top here. Now, you can see the way it's holding these moving averages here. And can you see that the whole way here that the 10 period moving average is staying above the 20? You can see that. And when it gets here, that the 10 period moving average is actually crossing over the 20, and then it crosses over very decisively. Can you guys see that?
Yeah.
Almost I'll make the chart.
I can see it.
I'm just going to do that. Okay. We're talking about this top here. I'm talking about the top. I'm just going to put a line in here. Okay. I'm talking about this top here now. This was where this vertical line is. I'm on a daily time scale. I'm on the 4 hour time scale. I'm just going to look in a bit closer as to what's happening there. You see the moving averages. The price is holding on to the moving averages, holding on, and you can see that the 10 period is actually sitting above the 20, and the 20 is above the 50. Then the first thing as well, the price actually breaks through these moving averages. Yeah, the price also broke through the moving averages, but it didn't stay below the moving averages. It carried on going up. Yeah, the price breaks through the moving averages and it doesn't recover. And here it comes back to the moving averages. But the point I want to make here is, here's the first time that the 10 period moving average actually crossed over the 20. Then it goes back up here, and there it crosses again. So what some guys do is they look, especially longer term investors, will on a daily look just at the 10 and the 20. And when the 10 period crosses over the 20, it's an indication that the price is turning down. Although this happens quite late on the 4 hour, you see it a lot sooner. Okay. Here's that high over here. This crosses over a lot sooner, which is another indication that the price could be turning down. And then over here, can you see that those moving averages actually cross through the 50 as well? When we get on here, can you see that the price, can you see that this 20 period is acting as resistance? There it's resistance. It's still resistance over here. Here the 10 is the resistance. Can you see that the price, it's resistance on the 10. Here it comes, it's resistance, and then it breaks through. So there the price is broken through the 10 period moving average. It's the first time it did it. Here it did it as well, but it found the 20 as a resistance. and then it broke back down again. Here now it's broken through the 10 and it's broken through the 20, and there the 20 and the 10 actually cross over. Then the price goes up, and here they cross back down. But if I go, obviously, if I go into the 1 hour time frame, I'm going to see it happening even sooner. If I go back to that high, there's that high.
Yep.
Here's that low.
Okay.
Here's that low that we're sitting. Here's that sideways movement that we're sitting in at the moment. So here the 20 and the 10 cross over again and go back up. So now some people base their trading strategy. They look just at moving averages, and when they cross over, it's an indication that the trend is changing. So if you hadn't bought here, you could buy here when the two cross over again, because it's showing you that the price is moving back up again. Or here, for example, you'll see that they cross over again, which shows that the price is going to drop again. So the point I'm making is that very often on trend changes, you get the moving averages crossing over. The same way as they cross over here, or they've crossed over at the bottom here. So it's another thing you can look at, but you'll also obviously find a trend line is going to give you here, for example, this trend line you could have drawn in here is going to actually give you an earlier indication that something is wrong. The same way as we could draw a trend line in here. I'm going back up here now. The moving averages on the shorter time frame, on the 1 hour, the moving averages would have crossed over down here already. But once again, a trend line here or a channel that I've drawn in there would have actually showed me a bit earlier that the trend is changing. It's turning back up. You guys with what I'm saying about how the moving averages cross over? So it's another thing you can look at, but very often you must look at that in conjunction with a trend line and with a Fibonacci level, for example. This
it crosses these trend lines all the time. It's not just, it's every day.
I know. That's why you have to, I prefer using trend lines, but now the reason I'm telling you this, it's just another confirmation that something's happening when the moving averages cross over. Here, for example, the 10 and the 20 crossed over the 50. So they're now sitting above the 50. But the actual change in trend was here already. They're breaking that trend line. I'm just saying it's another thing to look at, and it's also confirming that the trend has changed. But now the big reason I'm telling you this is that your momentum indicators are mathematically, especially your MACD, is mathematically looking at what these moving averages are doing. But I'll get into more detail on that just now. I just want you to first of all understand what a momentum indicator is. And a momentum indicator, actually, I'm going to read you the definition. It measures the rate of change in prices as opposed to the actual price changes themselves. So it's like when you're sitting in the car and you're driving at a constant 60 k's an hour, and you then put your foot down, you can feel the car pulls. It pulls you back in the seat. The momentum's changing. Or if you put your foot on the brake, the car's slowing down, the speed's coming down. In other words, the prices are coming down, but the momentum's also changing. So what these things do is they're measuring the momentum of the price changes. And it's doing that by looking back a certain number of a certain period, like 10 or 14 periods back, and it's subtracting the current price from the previous price 10 periods back, and then mathematically it's determining the momentum of the market. Let me read you another definition here. Okay, so I said momentum measures the rate of change in prices. Okay, the rate of change in prices as opposed to the actual price changes themselves. Momentum is measured by continuously taking price differences for a fixed period of time. So it's looking at the price difference here compared to X amount back. And then it plots this graph at the bottom. These are two different momentum indicators. They work mathematically, they work on different principles, but they're both momentum indicators. Okay, momentum indicators, I'm reading another definition, show the movement of price over time and how strong these movements are regardless of the direction of the price moves, regardless of whether the price is going up or down. It's measuring the momentum of the price changes. Are you guys with me?
Yeah.
You're getting your head around it a bit, right? Okay. I just need a sip of water. Okay. And typically what it does is it subtracts the closing price from 10 days ago from the most recent closing price. But that's a very simplistic. These two indicators apply more maths than just subtracting the price from 10 days ago to the most recent price. And if you want to, you can Google and you can have a look at the mathematical formulas they use. But that's not important here. Now, the important thing about momentum indicators is that you must not use a momentum indicator on its own. You must only use a momentum indicator in conjunction with a trend line or with a Fibonacci level. So a momentum indicator can actually give you an early warning signal that the trend might change. But it does not mean that the price is definitely going to change. It's like an orange light that comes on. And I'll show you just now what to look at in the momentum indicator. But this is very, very important because you get guys that get involved in technical analysis and they do a bit of reading or they do a basic course and they then start thinking that a momentum indicator is the holy grail and that you can trade only by looking at a momentum indicator, and you can't do that. You have to use a momentum indicator in conjunction with where the price has got to. For example, here the price has got back onto previous support level. If I take this level, that level there is on a Fibonacci level from the bottom here. It's actually on a very important fib level. So I'm looking at other things as well. But let me carry on with momentum indicators so that you can get a better idea of what it's actually doing. Let me just click this on so the chart stays there. All right, so, and all right, let's start with the RSI. I'm going to close this MACD indicator just for a moment. I'm going to drag that out the way. Now the way you get this onto your chart as well is you go to indicators, you go to insert. You can either go to insert or there's also an indicator. Here's also an indicator list. It's going to bring up the same menu. Or there you can say insert indicators. And the RSI, you're going to find there's a whole lot of, you see there's a shitload of indicators here, all these indicators. There's a whole lot of them. There's the moving average, for example. Yeah, and the custom, there's even more. There's a shitload full of them. But all serious guys that trade, a lot of these are Mickey Mouse and they're a lot of shit. And all they do is they confuse you. The two most important indicators, and I follow a couple of other guys who trade for a living and professional guys, and they literally, some of them, the only indicator they will use is the RSI. And some of them use the RSI together with a MACD. So out of all these indicators, and there must be 30 or 40, yeah. Forget about the rest. These are the two most important. And you'll see here under custom, you'll see there's RSI over there. So all I do is I click on RSI, and then this menu will come up. And here you can go and change the values, but just leave it on the default value. The default value on the RSI is 14, and just say okay. And then it actually puts the RSI in here. Okay, so if I hadn't had it in, it would have put it in. So I'm just going to go and delete it. If you want to delete the indicator, you just right click on it and you just say delete indicator. So that's the way you get it onto your chart. And you can pull it out the way, or you can bring it higher. And I've got two, so I can, and the same way with the MACD. All you do is you go to your indicator list here at the top. And mine's showing MACD there because I've already used it, but yours won't be up there. You'll have to go down to oscillators, and you'll find it under oscillators. So click on MACD. Once again, it'll come up with where you can change values and so on. You just say okay, and there you'll see it's put it in there. Okay, I'm going to go and delete it because I've already got it. But let's talk about the RSI first of all. Do you guys want to have a 5-minute break and grab some coffee or something? I'm going to grab some tea. My throat's a bit, and you might be losing a bit of concentration. So let's just have a 5-minute break.
Thank you. See you now.
I'm going to just pause this. Where do I pause this video? Okay, I don't want to. Okay, I'm just going to stop the share here, because then I can pause the video. Okay, I just need to share my screen again. You guys want to ask any questions at this stage, Jared? Before I carry on.
Sorry, I was on mute there. Sorry, what did you say?
Anybody want to ask any questions before I carry on?
Yeah, if you want to buy at a position where there isn't like a lower point to refer to set your stop loss historically, how sort of low do you go below? Do you look at a percentage that you go below that where you bought?
Yeah.
If you come in.
Yes. Getting back to that whole discussion we had about risk management. In other words, you know, it's debatable now what percentage of your trading capital you want to use on one trade. So you know, you might use, and especially with non-leveraged, you can use more. You can use 10 or 20 or 50% of all your trading capital if you want to. But what's important is if it goes against you, is how much do you want to lose of your trading capital before you cut, before you say, listen, this is not going the way I thought it would go. The most important thing with trading and the investment perspective as well. And remember, I'm not talking just about short-term trading, investment perspective as well. Because in investor, you're just looking at longer-term charts. An investor will typically start with monthly charts, drawing trend lines and support levels, then look at weekly charts, drawing support and resistance and trend line levels, and then go on to a daily. And a lot of investor guys will then look at a 4-hour to time their entry, to get their timing right, okay? But the important thing is that you always have a reason that you're going into the trade, that you're putting money at risk. You've got to have a reason. And this whole 2 months, everything I'm talking about, and the way I've approached it is using trend lines, channels, support and resistance, fib levels, Elliott wave, momentum indicators, whatever. All those things are there to give you a reason to expose your capital. You've got to have a reason. If you can't, that's why a lot of the serious guys keep a trading journal. They keep a diary. And every trade they go into, I'm using the term trade, whether it's trade or investment, same thing. Every time that they expose their capital on the market, they will write down the date, what they're exposing. Okay, they're buying Anglo or they're buying MTN, and you've got to write down a reason why you're doing it. Because the minute you write down a reason, you are also defining where you're going to be wrong. If you don't have a reason why you're getting in, how are you going to define where you are wrong? And also, having a reason for going in, you're also defining where you think the price will go. In other words, where you must take profit. So those three things, having a reason, having a motive, automatically tells you where you are going to realize that the price is not doing what you thought it would do. In other words, where are you wrong? And if it does go in the direction that you want it to go, or what your analysis said it's going to go in, where must you take profit? That's extremely important. You're not just, if your approach is any different, you're gambling. And that's what makes technical analysis, gives you those reasons. And getting back to your question, you saying you went into a level and there's nothing below it, then my answer would be, how much you at a certain percentage of loss of your total trading capital, you must say to yourself, I'm wrong, and you must get out. But 90% of the time, if you go further back in history on the charts, you will find a level. You can't just get in. There had to have been a reason for you to have got in there. And the minute you've had that reason, historically the charts will show you a fib level, or it will show you a trend line or something. Then, so twofold, two reasons, two things, in other words. A certain percentage of your capital that you're now losing is going to tell you to get out. But from a technical analysis perspective, you're also going to know that you should be getting out, because it's not going the way you envisage it to go. Okay.
Yeah. Nice.
I'm just going to share that screen again. Okay, you can see this Ethereum chart again. I'm staying on Ethereum. We can look at any chart for that matter. The principles of this game. I can bring up at the end of this, when I've shown you a bit of what the momentum indicators are like, how they actually work. Remind me, then we can look at the Anglo-American, because I know Jacques in Anglo-American. We can have a look at the Anglo-American chart on TradingView, and I'll show you the same things. Okay, I'm going to go onto the daily time scale. Now, the first thing about a momentum indicator, and Jacques, I've heard you use this term, and you'll hear the guys often talk about it. They'll talk about something being overbought or oversold. Have you guys heard that term?
Yeah.
Now, if they say something is overbought, it means It means that a shipload of people have already bought it. The market's getting into an area where you can expect the trend to reverse because it's overbought. Too many people have bought it in the same way as if a market is oversold, too many people have sold. There's a good chance that the buyers are going to start coming in, and when the buyers come in, the trend's going to change. And that's what we want. We want to get in when the trend changes. If the market's gone up too far and it's overbought, that's typically where we want to take profit. Or if the market's oversold, that's typically where we want to start buying again. Now, the RSI indicator, can you see there's actually on the right-hand side here, there's a scale. It goes 0, 30, 70, and 100. Now there's a thin red line here on 30, and there's another one at 70. Can you guys see that?
Yeah.
The 70 and the 30. Jacques, your bril on.
Yeah, I can see.
All right. Now, when the
joke is that graph almost is exactly the same as the Anglo one.
It is almost exactly the same, but there are subtle differences, and that's what I want to show you now. So remember the RSIs, and you guys can go afterwards, go and read up, just Google RSI indicator, and you'll find a lot of information. Then you can actually go and read up more about it, and our guys use it. I'm going to give you the basics here. When the RSI indicator goes over 70, it means we're now entering overbought territory. That's typically where we can expect the market to reverse. And when the market goes 30 or below, it's typically in an area where the market is oversold. Now, this having been a bull market, you can see most of the RSIs actually sitting in the top half of the scale. This whole period yet never got below 30. But also remember, I'm looking on the daily time scale. We're going to look at it as well on the 4 hour and the 1 hour, which is going to be different. But we start by looking on the daily, because that's where our analysis starts. We can even start on the weekly. So on the weekly, you can see there was an overbought area. There was an overbought area. There was an overbought area. There's an overbought area. But let's go back onto the daily. Now, the first thing we look at is the market overbought or is it oversold on the daily. But the dailies, and once again, investors will typically look, and if you have a look at the Anglo chart just now, you'll see that when Anglo turned at the top there a month or two ago, the RSI was sitting in overbought area. Here you can see Bitcoin was sitting way above the 70 level. So this is very overbought. This is mildly overbought. That's very overbought over there. All right, now I'm gonna look at this.
Is it chicken or egg? What causes the price to rise? Overbuying, or is it the high price?
It's just that the price has gone up so far that this indicator starts moving into overbought area, overbought territory.
When the price overbought is volume.
No. All I'm saying is that the indicator has entered overbought area. So above 70 is overbought area, below 30 is oversold area. So when this indicator goes over 70, it's just showing me that the price is in an overbought area. Right?
Is it the amount of trades?
No, it's looking at momentum. And you, if you want to know exactly how it works, then you must go read up on the RSI and look at the mathematical formula that they've
What is the momentum derived from?
Momentum is looking at the current price and is subtracting it from previous prices, but it's also applying other maths to it. So it's looking at the price. So in other words, here you can typically see the momentum. This thing's going up a lot here, but it's because the price is going up a lot. So this has got a lot of momentum.
Yes.
Remember, this is a momentum indicator. So that there's a lot of momentum. When this drops, the momentum now is towards the downside. But it's obvious because the price is also dropping. So the momentum is towards the downside. When the price is going up, obviously the momentum is towards the upside. So this almost looks identical to the price chart, but it's not entirely identical because it's measuring momentum and not just price. It's looking at how the price has been changing over the last period of time. So typically over here, can you see the price went up and then the price moved sideways? So there the price reached a high level over there. The momentum also reached a high. And obviously as the price now goes into a consolidation period there, the momentum drops back. The momentum is dropping because here there was a lot of momentum to the upside. That momentum's been lost now. So that's why the RSI indicator is also dropping. Okay.
But then if I can ask quickly, if we're looking at trends from a different time scale, then does this not give us a trend that if you wanted to be in Bitcoin for a longer run, or Ethereum, sorry, for a longer as an investor, then you might be in a good position?
You can argue that because, in other words, what you're saying is that this indicator reached an oversold area here.
Yes.
And together with a price, yes, you can argue that. But this is warning me that the price can turn. But as I said, don't fall into the trap of only using the indicator.
Okay.
The indicator is giving you a warning that something might happen, that the trend might change and start going up.
Okay.
But for that matter, if we go into the 4 hour now, remember I said this might be a correction. This price could break that low. And then this indicator will turn and it will come into oversold territory again. So similarly, if I look over here, if you see over here that this price actually went into overbought territory here already, it broke through the 70. But can you see where the price was sitting? Okay, the price was sitting there. So although it's moved into overbought territory, the price still carried on for a long way. So you can't, just because the minute it breaks, gets into overbought territory, say, okay, now I'm going to take profit. It's merely warning you that it's getting into overbought territory, but you have to be using this indicator in conjunction with a trend line or with a Fibonacci level or with a channel. And here you can see the price. If you draw a channel on here, you can see this is clearly still moving in a channel. So it's warning me. I mean, when this price gets to that level there, it's roughly there. It's warning me that something could happen, but it's not necessarily to say it's going to. The same way as here, it's warning me that the buyers are going to come in, but it doesn't mean that this is the low. This price could turn around tomorrow. If the index is turned down and the dollar strengthens, this price could turn down, and this could turn back down and and become even more oversold. So in other words, something that's overbought can become even more overbought and more overbought for a long time. Yeah. It's just a warning. But hold on a second. I just want to show you something else. Then it's also going to make things a bit clearer. This is now on the daily time scale. You have to look on a shorter time frame to actually get to see what's really happening here. So now I'm going to go into the 4 hour. I'm just going to take this off so I can scroll my chart back. So now I put in this red orange line here at the top. That's where the top was. Now going back on the 4 hour, I'm going to just go back quite a bit. Here on the 4 hour, got into overbought territory. Can you see there was a correction? It got into overbought territory here. Can you see a correction took place? Over here, it got into overbought territory, and shortly after that, a correction took place. There as well. There as well. There's overbought. There's a correction. Here it's moving into overbought territory again. But now, so the RSI is warning me that it's getting into overbought territory. There could be a trend change. Just remember, this is hindsight, so we can see there was only a correction. But this could have been a top, eh? This could have been, this market could have turned and come back down. But now I want to show you something very interesting. And this is the way that most guys actually use the RSI. They talk about divergence. And divergence, the definition of divergence is when the price continues up, but the indicator doesn't. Now, here's the first. I'm gonna drag right back. I'm going back now. I'm now back in February. Where is this? I just want to show you a couple of examples. This is 2021, beginning of this year. Remember, I'm still on the 4 hour. You see the price has become overbought here. Can you see that this level here is lower than that level, but the price is higher? So this is what we call a divergence. And I can draw a trend line in like that. So although the price is still going up, I'm getting a divergence that the RSI is making a lower high than it made there. And then you get the big correction. And I can show you a load of these all over the place. Look over here, for example. Look here, the RSI went into overbought territory. The price carried on going up. Look at this massive divergence here. Can you see that price? That RSI is much lower than there, but the price is higher. And this is the way that most guys use this indicator, because this is a pretty reliable indication that something's going to happen. There's a divergence. Price is higher, but the RSI is lower. And then you get the correction. And the same happens at the bottom. You see that the price here made a new low below that low. But look at the divergence on the RSI. There's a higher high there. Can you see that RSI is higher than that one? So that level looks, seeing this, and this would also be a fib level. This will also be, if I take this fib level from here, it'll most probably be a 68 to 78.6 level there. It's exactly 78.6 from this bottom, this previous bottom here, this low over here on the left. So there's my first warning that a correction can take place. So typically, if you're in a trade here and you see this, that's a very good place to take profit. But now there's my trend line as well. Okay. But there, that lower high there would have made me take profit up there already and not wait maybe for it to cross over to break the price here, to break the trend line here. You see the moving average is also crossed over there. The 20s crossed over the 50. There, the 20 and the 10 crossed over the 20 over there, but there they also crossed over. But that was still a triangle. There's a continuation pattern. There's a triangle in there. And then the price carries on going up. But this is starting to warn me. This is starting to warn me. this is a good area to take profit, or I'm going to start bringing I'm going to start ratcheting my stop loss up. So up here, if I'd bought here, Craig, you asked this question early on. You buy here and the price goes up and it turns. You had found support on the moving average and the price carries on going up. If I'd bought here, my stop loss would now be here, below this low. Then the price starts going up, does another correction. I can now bring the stop loss up a bit. I can, not too close, but I can put it here. Then it goes up further. But when I see this happening and this divergence taking place here, then I can start bringing my stop loss up even closer over here. Can you guys see what pattern this is? Sloppy loans.
Head and shoulders.
Yes, thank you very much. There's your head and shoulders. There's your neckline. There's your shoulder. There's your head. There's your shoulder. It's not only a head and shoulder pattern, but that's a lower low. So this here you got higher highs, higher highs, higher high. Here you've got a lower high. And you got a head and shoulder, and you got a trend line, and you got a divergence here on your RSI. So there's a lot of warning that there's going to be a trend change here. Okay, I'm going to carry on and just show you some more. There's the divergence on the low side. This price makes a new low. Awesome place to buy. Absolutely awesome. 78.6 level. My risk is very defined. And I've got a divergence. Awesome spot to buy. Price goes up. It pulls back. It comes back to roughly 50% of this move. And then it carries on going up. Now I can immediately start drawing in a trend line here. Okay. Here's an ABC correction. ABC, this level only came to about 50% of that level. But now also look what the RSI does. You see the RSI, it almost like resets itself. So you get a price moving up and the price corrects. The RSI resets itself, comes back to a low position into an oversold area. The price is resetting itself. The price is doing a correction. Can you see the RSI almost came into an oversold area? But if you look at the amount it dropped, was not that hectic compared to this level here. It's not like a drop like this. So it's almost like the RSI resets itself. Then what some guys do as well is they draw trend lines on the RSI. So the same way as what you draw trend lines here, you can now draw in a trend line over there. This is an ABC correction, so there's a good place to buy when it breaks out there again, or there it comes back to test it. But what guys also do is they'll draw a trend line on the RSI. So there you can draw in a trend line. And you can see when it breaks this trend line over here, it's already an indication that you can start buying. You don't have to wait for there, because it's breaking that trend line of this trend that was down over here. Are you guys seeing what I'm seeing? Are you seeing everything?
Yeah.
Yeah.
So that's the way that you use the RSI. Okay, here the price carries on going up. Look at this massive divergence there. There's a new high. There's a much lower low over there. There's another divergence. There's your correction.
How do you put this into trading view? How do you put the RSI into trading view?
I'll share trading view just now, and then I'll show you how to do it. All right, now we're getting up here to this. This is Ethereum. There's my trend line. Look at what's busy happening to this RSI here. If I can actually go way back here. I can start drawing a trend line. I can actually draw a trend line in here, like this. That level is actually below that level, but look here, it starts becoming exaggerated. Look at this. Let me take that one out. So here, there's that correction. It's in overbought territory. Then the price carries on going up. You see there's a divergence over here. Lower than there. There's a correction that takes place there at that level. But the price still goes on up. This is FOMO. People, the herd mentality, people are busy chasing this price up. But they're not watching what's busy happening here, and they're not realizing that this market's busy losing momentum. Because all they can see is this price going to, yeah, it was 4,000. And the news and everybody and all their mates are telling them this thing's going to 10,000. Okay, so there's a lower low over there. And then there's another divergence. Look, another new high over there. And there's a third divergence over here. Even lower, this is not even lower than that, it's lower than that. So this is a big warning that this market's going to correct itself, that the price is going to drop. Trend line, then it breaks a trend line, crosses, moving averages cross over. Now the price drops. That level there will be a fib level if I go back and I measure from back there. I must probably start off by, I'll start off by measuring it over there from this level here. That's the level I'll measure it from. But I'll also definitely draw in this low here. That low there is a very important low. That's where the market really turned. So there you can see that that level is 78.6 from there. It's actually more 78.6 onto this low over here. There's also a trend line here. Can you see if I draw a trend line in here? Look how accurate this trend line is. And if you go onto the log scale, on trading view, remember this is going back quite far. This is going back, but look how accurate this trend line is, and you understand why people bought here. You've got 78.6. You've got this trend line. You've also got this previous low here acting as a support. There's a support level running through here. You see there. Found resistance, broke through, tested it again, came back and tested that level, and then carried on up. Now it's dropping onto support. Now look at this divergence here. I'm not just going to look at these two lows over here. Look at this massive divergence here. So it makes a low, and then it makes another low. And this often happens because this is a stop run. It's taking out people who bought here. And they're taking the weak hands out. But look at this beautiful divergence over here. Price makes a low, but look at the divergence on the RSI. When the market starts moving into a sideways market like this, it becomes more tricky with this whole RSI story. All you can do is draw channels and trend lines. There's a channel running down here. There's a channel running up here. There's a channel running down here. And on the 1 hour, now with it running sideways like that, you must now come in onto the 1 hour. And I'm going to just squash this a bit. I'm now on the 1 hour time frame. Let me squash it even a bit more. I'm now on the 1 hour time frame. So there's that divergence over there. There we've moved into, there's actually a divergence there. Can you see that one? Made a high there. Made a high there. Made a new high. Can you see the divergence? Here it made a low. There. Can you see the RSI is in oversold territory and the price is still up there? Then the price makes a new low. There's a divergence over there. You can see it, eh? You guys with me?
Yeah.
All right. Same here. Here was actually also a divergence there off that low. But look, oversold territory. This is on the 1 hour now. Eh? There, oversold territory. There's actually a divergence there as well. But that happened this last weekend. There's the low. No, that's not okay. Now that's not a divergence because there's a divergence over here. This is not a divergence because the price is higher than that price. So you can't say that there's a divergence between here and there because the price is high in any case. But there is a divergence over here. Small,
Sorry, I've got to go shortly.
Because the price is much lower, but this didn't drop much lower.
Yeah.
Can you see here this market's busy losing momentum here?
Yeah, definitely.
I've got a visitor. Okay. Also trend lines. Remember the guys use as a trend line, so you can draw. I'm just giving you the basics. You guys can go and look at all your stuff yourself. You see there's a trend line there now.
I like the divergence.
The divergence is an awesome, but I'm going to repeat this another 100 times. The divergence is a warning signal that something's about to happen. I can show you. Okay, I'm going to go to the S&P 500.
Could we pop it onto TradingView? Sorry, I've got to go shortly.
How much longer have you got?
About another 7 minutes.
All right, I'm going to go. It's fine. We'll carry on next time. I'm not going to carry on without you. I'm going to go on to TradingView. Then next time on Thursday when we meet, I'll start discussing the MACD, because the MACD is also a momentum indicator, but you use it slightly differently. You also get divergences on the MACD, but there's some other things you need to look at there as well. So we'll leave that for Thursday. All right, I'm just going to stop sharing this, and I'm just going to go find my TradingView. I'm actually in TradingView.
My TradingView's got the RSI on it. I don't know why.
Okay, let me just share this screen now. So hold on. Let me just pull this there. Let me just share the screen. TradingView. This is TradingView. Yeah. Can you guys see TradingView?
Yeah.
Okay.
Yeah, I'm on the same graph. Different.
You're
on weekly. Put it on 4 hourly.
This is on weekly. Let's leave it here for the meantime.
Okay.
I'm going to show you that these things even work on the weekly. Wait, I'm losing my track. What did I want to show you now?
How to put the RSI in?
With the RSI, you go to indicators. Candles. Why is mine indicators? Mine's looking a bit different. Okay, indicator templates. But at the top here, you're going to find indicators. I've already put mine into my favorites. You can put it into your favorites.
Is it called relative strength index?
Yeah.
Okay, I found it.
Well, it can be called the RSI. It could be called just the RSI. When then you just say add, and then it will come up. You see here on the left, there's RSI. It says RSI. There is something else called a relative strength indicator. When I talk about relative strength, they're actually talking about something else. But
Oh,
But so long as it says, does yours say RSI? Have you inserted it onto your chart?
It does say RSI, yes.
Like there at the bottom left.
Yeah, I'm also just going to go onto the Anglo share.
Okay. Now, if we look at the RSI, so you've got the RSI up.
Yes, thank you.
And there's also a way you can put it into your favorites. You'll see there. Okay, yeah. You see, you just watch my screen here. You'll see, I can search there, for example. I can say RSI. And then there it comes up relative strength index, but you can see there's a place to put a star in there at the left. When you click on that star, then it puts it into your favorites. So that way, then it's a lot easier to find for future if you want to put it on. But look here at the, okay, this is on a weekly. You see this, you see the divergence here. You see the divergence there. You see that's a new high, newer high than there. You see the divergence. Look at that. Look at that one, how much it is below that. But let me show you this on the daily. This is on the daily, yeah. So you guys can see this divergence, eh? Over there, how much lower that RSI is than that one.
Yeah.
Remember last week we spoke about rising wedges.
Yeah.
It's a reversal pattern. This is a rising wedge. Here's your rising wedge. A rising wedge is a very good reversal pattern. And normally when out of a rising wedge, the price normally drops at least 68% off this low. Bitcoin as well. If you go and look at Bitcoin, Bitcoin is a beautiful rising wedge.
This almost looks identical to Bitcoin.
I know. Look at this. Look at this beautiful rising wedge over here. There's your rising wedge. A rising wedge is a reversal pattern. You can actually take this back there if you want. You can put it there, put it there. That's actually drawn more accurately.
Nice.
Have a look. This is now on Bitcoin. Have a look at this divergence. Look at how this RSI is busy dropping here. On that level, how much that's lower than that. Look how much lower that is than that. The massive divergence taking place here.
So what's the indicator to watch on the RSI for its turn? If it's going bullish?
Divergence.
You'll get divergence.
You've got to wait for it.
You'll get divergence at the bottom. Here's divergence at the bottom. You see that low over there? And that low there. This low is lower than that low. Look at this divergence here. This RSI is much higher than that RSI. Okay. So you've got a divergence here. Remember, the divergence is the price makes a new high, but the RSI doesn't. On the reverse side at the bottom, the price makes a new low, but the RSI doesn't. Okay.
Cool.
That's a definition.
I like it.
That's the definition of a divergence. So it's an early warning sign that the trend is about to change. But as I say, you've got to use, I cannot stress this enough, because human nature, people are lazy. So what they start doing is they start looking just at divergences. So what they'll do typically here is, they see the first divergence. There's the divergence over there. So then the guys who can short the market, they short the market there. But then this price comes back up, or you've taken profit there, but the price comes back up. So it's a warning that something can happen. But look how far this dropped. This only dropped 38% of this move. And it came back onto a support line here. So this RSI here is a good indication that you should take profit, but not necessarily that you must short the market, or not necessarily that there's going to be a trend reversal. You have to now see what happens when the price does drop. It found support. The RSI resets itself. Can you see this RSI came back down almost to the same level as here? And then the price carries on going up. There's another divergence, but the price found support again. There's your third divergence, but this time the price didn't find support, it broke through. So it's a warning. It's a good area to take profit, but it's also a warning that that's something might change.
Yeah. Thanks, Jacques. I gotta go.
Yeah.
Appreciate it.
All right.
My 2 hours are up.
Hey.
My 2 hours are up.
All right.
Been quick, eh?
My voice is up
Goes
as
very
well.
quick.
Goes quick when you're having fun, eh?
Totally.
All right. We'll on Thursday. What time suits you,
Yeah, anytime.
Jared?
Yeah, probably 4:30. Can make it work. Yeah.
Okay.
Yeah, good for me.
Well,
Let you know if anything changes.
all
right.
Okay. Cheers, Jared. Yeah.
Cheers, everyone.
Okay,
Check you soon.
okay, guys.
Jacques, you said you got golf on Thursday in Stellenbosch.
No, cancel. Rain.
Okay. So
I'll
you
see
can
you
also make
4:30.
you can also make 4:30 and
4:30 is fine.
okay. Like
4:30 is pakhat.
Okay.
We'll have coffee.
Yes. We'll have coffee until everybody's here, and then we'll. All right. Let me just. I'm gonna just stop the share, and I want to pause this video so I must.
Yeah, you got to pause.